Well, traders, before diving into large time frame charts on a daily, on weekly, and maybe even on monthly time frames, let's observe the weekly chart of DAX and where DAX closed on Friday. It closed on 14,610, as you can see here, which means basically it closed right at the large time frame resistance, but also a resistance that was tested several times before on these up moves here, 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 and here. Now, when we go down on a daily chart like this is the usual daily chart that I'm using, showing gaps, various ranges, moving averages, and so on. We can see here several things which led into the bullish context before the week even started. First of all, we had here price trapped for 24 trading days in a range of 450 points between 14,150 and 14,600. We got the false break first on US CPI in December, followed by the real breakdown on the ECB day, and then we got the 100% range expansion down to 14,700 here. The low was made on December the 20th, but in the pre-market session, and market never tested the low. Same thing happened here as well. On the very low of this entire upswing, where the September and October lows are, futures dipped below large time frame support 11,850, while DAX index didn't, and it never tested that low that was made in the pre-market session. So index didn't went where futures already were, and that is also one of the indications of strength. When we observe all of this move, how every bigger or smaller dip was bought with only limited reactions from the resistance, then it is also a good idea to make a fib out of all of this to see, are we getting some confluences? And if we make a fib like this, you can observe the confluence here, the big confluence between daily 200, fib 38.2, and very significant level on 14,570, representing April low here, resistance here in June, and high in September. So basically it was an axis line. And yet on the way down, DAX didn't test that. DAX again made, in this case here, swing low in the pre-market session and never tested that in the RTH session. So before this week, we had here a range with bullish context. Also 14,150 was used here as a resistance, and later here on Tuesday was defended after an early break. This is very important because on Tuesday and on Wednesday, on these two up days, we had early breaks right after the open. Now we can observe the large time frame charts, starting with this one, and we can also go to the futures chart with the volume profile and to observe this area here, which is a big low volume node here. And you can see how price was rejected on the way down here in this 11-month range, which was leaning on 14,800, and every time they tested the 14,800, market rejected that attempt. When the level became resistance, market was rejected those attempts to the downside. This low volume node is 500 points wide. It's from 14,550 up to 15,050, with 14,800 right in the middle, and price is there. Cash, as shown, closed on 14,600. So this is a zone where attempts here for breakdown and here for breaking out and inside the former range were rejected multiple times in the past. But this low volume node also means that if market is able to break higher, it could be then accepted inside the upper range. Since the upper range was a range where market traded 11 months before, it is logical that previous attempts were rejected. But those attempts, as you can see here, 1, 2, 3, 4. Now this attempt here is coming from a position of higher low, similar like this here. But this here failed, and failed also with the help of the ECB. This one here, this candle was an ECB day. It is very important now, is the price going to be accepted inside this area or rejected to the downside? On the way down, if we got a rejection, 14,150 is again going to be very important, then low of this move. As you can see, low of this move on futures was also very near to the previous all-time high from February 2020, and that would be the pre-COVID high. Those areas, this and this, remains to be important in any possible downside move. In any possible upside move, 14,800, 15,050 as a middle and the upper part of the low volume node. Any pushes higher with the failures and going below 14,550 would be possible false breakouts, with the market going down toward the 14,150 again. So same levels are going to be important for the future as well. Certainly it is early to observe the monthly chart, since only the first week is gone in January. It is just an illustration how this first week in January is almost the same size like entire month of December. But let's go down again to the weekly chart and compare this strong week that the DAX had with the weekly candles on S&P and Nasdaq. And just to note that this first week of January would be still a lower liquidity week. The real trading and the real volume is going to come from Monday. So this is what happened so far with the close right at large time frame resistance. Let's observe S&P and Nasdaq now. This is large time frame S&P chart, weekly chart as well. From the corona low up to the all-time high, we got the bounce right from the halfback. And if you make a fib on this here swing, which is a swing from October lows, you can also observe how S&P is holding the halfback, and you can see here that halfback is basically right at the 3,800, from which on smaller time frames, and you can observe that chart on my Twitter profile, S&P bounced 6 times with clean bounces and with 3 false breakdowns. Again, a lack of downside follow through is something that we can observe on the S&P chart as well. And if we take a look on the Nasdaq chart, this is Nasdaq weekly, we can also observe 61.8 fib retrace from the corona low up to the all-time high, with again these 2 candles with rejection tails. So this area was defended so far, and this could be a basing for a move higher. We shall see about that, since these indices are now lagging to DAX, and DAX is actually leading